No one in their right mind is buying a house in New Zealand at the moment, right? I mean, house prices are down, interest rates are up, and property investors are about to be taxed way, way more. But here's the thing, some people are still buying properties. Take a look at this. You can see that over a third of properties sold in New Zealand in the quarter to December 2022, they were bought by property investors. That's more than people moving house, which make up about a quarter of sales, and way more than first home buyers, who again make up about a quarter of the market. Property investors still active. And the question is, why would that be the case? Well, that's what we're going to cover in today's video, specifically the opportunities and the risks that we see in the New Zealand property market as part of this property market update in January 2023. And you're also going to see the 6 graphs that you need to know about if you are considering purchasing a property in New Zealand. So firstly, let's talk about where house prices are going and have been. Take a look at this. New Zealand house prices are down about 14% from their peak. So they peaked in November 2021, and since there, take a look at this. We are down almost 14% in the data up to November 2022. That means in just a year, 12 months, down about 14%. But bear in mind, house prices are still way above today where they were pre-pandemic, about March 2020. Now, the other thing you need to know though is while New Zealand house prices down about 14%, that's not the case for everywhere. Not everywhere is down 14%. So take a look at this. This map shows every council area in New Zealand and how house prices have changed since their local property market peak. I'll show you what I mean. So Aotearoa, that property market peaked in April 2022. And since then, in only 6 to 8 months, house prices down there over a third. They're down 36%. Now, bear in mind, that's probably because it's a very small region, maybe not many people buying or selling properties here, but where we've seen house prices fall the most are in some of those larger regions. Take a look at Auckland, down 18%. Property prices peaked November 2021, a year later, down 18%. And it's been hit even worse in the Wellington region. So Lower Hutt property prices peaked October 2021, just over a year later, down over a quarter. Property prices there down 27%. If we look at Upper Hutt, 23%. What about Wellington City? Down 20% as well. So Wellington region has really been hit hard in terms of property prices. But where hasn't been hit as hard? Well, take a look down at South Island. Christchurch City, down only 8%. Ashburton, down only 2%. And what about Selwyn District? Down 6%. So while you might look at the graph saying New Zealand house prices down 14%, you need to know that that is not the same for everywhere. Some places, Wellington and Auckland, Aotearoa, been hit really, really hard. Some places, most of the South Island, been relatively protected. So now that we know what's happened to house prices and that there's a bit of variation around the country, let's talk about where house prices are going to go in the near future. One of the most interesting things you need to look at is what is happening to house prices month to month, because that is going to give us a sense of what is happening on the ground right now. Take a look at this. This shows the last 18 months with how house prices have moved month to month. You can see directly after the peak, December 2021, house prices down 1.5% in a single month, following up by down another 1.3%. And then look at this, about mid-2022, we started to see some big house price declines, down 2.1% in March, another 2% in April, 1.5% in May, and another 2.1% June 2022. But what happened in the second half of 2022? Look at this. We started to see the house price declines slow down. 1.3% in both July and August, 0.7% in September 2022, and then a small, minuscule increase in October before, bam, down another think 1.4% in November. Now, bear in mind that is primarily because the Reserve Bank came out in November with a very strongly worded monetary policy statement. Effectively, they said, we're going to increase interest rates very quickly or more quickly than we'd said previously, and that spooked the market a wee bit. But what I want you to focus on is the momentum. So the red line shows the average over a rolling 3 months. So you can see here in the heady times in earlier 2021, house prices increasing very, very quickly. Here, early 2022, house prices falling very quickly. But we have seen the momentum gradually improving. Now, don't get me wrong. House prices are still falling, but at a slower rate. And what does this suggest to us? The bottom of the market is starting to approach. And one thing you need to look at is all of the major banks' predictions for what's going to happen to house prices. So this graph here shows what house prices have actually done, but then we've got the largest financial institutions in the country. We've got their forecast sitting in front of us. I'm talking about ANZ Bank, the Reserve Bank of New Zealand, Treasury, and also Westpac. And what do we see? Most of them are seeing the bottom of the market around about the end of 2023. I'll show you a summary of this in a moment. But first of all, the main thing I want you to take away is we are predicting, or many of the banks are predicting, that house prices will bottom out ballpark mid to late 2023. And then what do we see? We start to see a recovery as well. Most banks are predicting that we will see some amount of capital growth relatively quickly after we hit the bottom of the market. Westpac being the most pessimistic, Treasury being the most optimistic. They're predicting about over 20%, think about 25% capital growth in the 3 years after the bottom of the market. Let's see a summary of this same information. So when is the property market going to bottom out? Well, Kiwi Bank, Tony Alexander, an independent economist, Opus Partners, that's us, we all see the market bottoming out June to September 2023. Treasury and ANZ, they think Q4 of this year, so in about 9 months odd time. The Reserve Bank and Westpac, a bit more pessimistic, they're saying the start of 2024. And what about how far are house prices still going to fall? Maybe about 6.3% according to Kiwi Bank. We say 7, Treasury about 10% there. Now, the key thing I'm trying to get across to you here is what's the opportunity? Why are those 35%, or why is 35% of the market being made up by property investors and the rest made up by people moving house first home buyers? It's because many of us investing in today's market see the opportunity that we're going to be investing near the bottom of the market, and that as we saw with these forecasts over here, we expect the market to recover. It's effectively trying to buy as low as possible in the hope that we're going to start to see some capital appreciation over the next couple of years. And so if you are able to buy near the bottom of the market, of course you can never time it perfectly, but can we buy roughly within cooey of it? Then hey, there is a bit of an opportunity there, certainly to purchase at a cheaper price today than you could have at the same time last year. But if you are going to buy in today's market, you need to be thinking about one of the key risks, which is interest rates. Let's get into that now. Now, no New Zealand property market update would be complete without talking about interest rates right now. And what I want to show you is the official cash rate. Now, the OCR is the interest rate that the Reserve Bank of New Zealand uses to control other interest rates. So if they ramp that up, what's that going to do? It's going to impact your mortgage interest rate, what you pay to your bank. Now, what have they done? Well, since mid-2021, they have increased interest rates enormously from about 0.25%, and they've ramped it up to where it sits today, 4.25%. And what we can see is their forward guidance of where do they think it's going to end up. And what the Reserve Bank is currently saying is a peak of about 5.5%. So we've already gone up 4 percentage points in terms of the OCR. They think it might go up by another 1.25%. Now, if that's freaking you out, I do just want you to focus on what's already happened. the bulk of the interest rate rises have already happened. We've gone from this very, very low bar up to where we sit today, just over 4%. And then we've got a wee bit to go. We still will see interest rates rise, but it won't be by the same degree that we've seen over the last 18 months from about mid-2021 to where we sit today. But you still need to know that mortgage interest rates are going to increase in the early part of 2023. Currently, the one-year interest rate when I'm recording today is about 6.5%. We see that going up to about 7%, early sevens. And in fact, I have seen the internal forecasts from one of the major four banks. They see it peaking at about 7.1, 7.2% when talking about the one-year fixed mortgage interest rate. So if you are thinking about increasing your mortgage, taking out more debt, or fixing your interest rate, just bear that in mind at the moment. But we are going to cover interest rates more in depth in our next video. So what are those key opportunities and risks if you are thinking about buying in today's market? The number one opportunity is to buy a property more cheaply than you could at the same time last year. Buy a cheaper house. The second thing is potentially buying at the bottom of the market and seeing some amount of capital growth, seeing that house price increase as the market recovers. And you've seen those forecasts from the major banks and financial institutions in this video. And the third major opportunity is there are more houses available for sale today than there was 12 months ago. That means you can take more time to find a house. You can negotiate even harder, and you don't have to rush in to just buy a house because somebody else is going to buy it before you do. You can take your time to find a house or a property that fits your specific needs. But there are risks in buying today, and the major one is around cash flow and interest rates. As those interest rates increase, you're going to be paying more money to your bank, and you've got to question, if I buy this property, am I able to hold on to it? You'll never get the long-term gains of investing and buying in property if you cannot hold those properties for the long term. So one key thing, if you are a property investor, is download our return on investment spreadsheet, because this is going to allow you to create a cash flow forecast to see, can I hold on to that property or not? The link's down in the description.